ROBS C Corp is an entity structure that's very common in the franchise industry. It's very common with business buyers. What's up, everybody? Michael Reeder, CPA here, managing shareholder of Swartz and Reeder Advisors, a CPA firm for small businesses and individuals with a niche in the franchise and business buyer industry. Welcome to our YouTube channel. Don't forget to click the subscribe button down there. And so, thank you so much for being here. Today's episode, I have our team member Jeet Chaudhary back again. Hey, Jeet, how you doing?
Hey, hi everybody.
Awesome. Looking good. Got the Buddha there. Always that Buddha is just always makes me feel relaxed. You got a nice setup there at your home office. That's awesome. Thank you for being here. So, Jeet, we're going to talk about today that pesky little entity structure that not so many people know about, especially accountants. Especially you would be like, not that many CPAs know about this, but this is one of our specialties over at Swartz and Reeder Advisors, and it doesn't always make sense, right? Like it doesn't always make sense. There are pros and cons. We're gonna so what is it, right? Like it's the ROBS C Corp. The ROBS C Corp. ROBS is an acronym, right? ROBS. Or is that ROBS, right? We'll let the video editing team get that one right. Is an acronym for Rollover as Business Startup. And so a ROBS C Corp is an entity structure that's very common in the franchise industry. It's very common with business buyers. And what it is it's a C corporation that is owned by its own, that is owned majority, very commonly it's owned 95%, but it's the majority of it is owned by the actual retirement plan of the C corporation. And so this allows entrepreneurs, business owners to invest in their business and to operate their business with their retirement funds tax and penalty free, depending on the type of ROB, because that's a whole different thing. This is today's episode is just a brief introduction to ROBS. Believe me, we have plenty of episodes on all things ROBS C Corp. But this is what, whenever anyone out there in this industry, because I know a lot of our followers are in the franchise space, or in the business resale space, or in the business broker space. And so a lot of people have heard of this entity structure. This is what that is. It's ROBS C Corp, Rollover as Business Startup. C Corp. And why is it a C Corp? It's a C Corp because it cannot be an S Corp. Well, it can't be an S Corp. Why? Because S Corps have to be owned by individual people that are US citizens or permanent residents. So a retirement plan is not a person, right? Like I can't have my guest today is the retirement plan. And then here's a retirement plan that's talking, right? Like a retirement plan is not a person, right? Like I am a person, Jeet is a person, right? We can own S Corps, but an S Corp cannot be owned by a retirement. So that's why it can't be an S corporation. Also, a ROBS cannot be a flow through entity. So it can't, so that takes sole prop, and it takes LLC off the table. So ROBS C Corp is this very specific structure. And so this video is really out to, to other accountants out there, in addition to, Jeet and I, when you're looking at the financial statements of a ROBS C Corp and you look at the balance sheet section, right, you're going to see that the majority shareholder of the ROBS C Corp is the retirement plan of the C Corp. So when it says, shareholders equity - retirement plan, that retirement plan is actually the shareholder of the C corporation. So for example, what will happen is a client will set up a C corporation, okay? And there are some vendors out there that specialize in setting up these ROBS C Corps. And if anyone wants a referral, always reach out to me. Let me know. I have a network of ROBS vendors out there. But what happens is the C Corp gets set up, number one. Then the C Corp is going to get its own retirement plan, okay? And then what's going to happen from there, there's going to be two different paths of the money. Path number one is going to be the rollover. So the client is going to take money from their old existing retirement account and roll it over into the new ROBS C Corp retirement account. That component of the cash flow is called the rollover. All right, and very often it's going from pre-tax to pre-tax, so it's a tax-free event, that rollover. Okay, so at that point, the money is now it's no longer in the old retirement account. You can see my hand over here, old retirement account. It's now in the new retirement account of the C Corp. Okay, but so that's rollover. All right, now step 2 of the money flow is now the retirement plan of the C Corp is going to invest in the stock of the C Corp. So this retirement plan is going to purchase shares of the C Corp from the C Corp. And then so the money is going to go from the retirement plan of the C Corp into the checking account of the C Corp. And that's what's called the capitalization of the business. That's step 2 of the money flow. That's how the money finds itself in the actual checking account of the C Corp, where it could be used to invest in the business assets, to fund the operations of the business. And that is step 2, that is capitalization. So step 1 is the rollover, step 2 is capitalization. And so, so everyone, if you don't know Jeet Chaudhary runs the bookkeeping division of Swartz and Reeder Advisors. He leads a great team over at the bookkeeping division. Jeet, keep doing what you do, brother. But so, Jeet often will, Jeet and his team will, they know this more than several other bookkeepers out there, because a lot of other accountants and CPAs aren't aware of this. They'll see a checking account statement, one of the first few months of a new business, and it has this $500,000 deposit from, it's usually like a wire transfer from like Morgan Stanley or Charles Schwab or Fidelity or Vanguard, or what the heck is that? $500,000, and like at the early days when Jeet first started out with me, like at the early days, like him and like now Jeet knows this more than most bookkeepers out there. That $500,000, that is, like where do we put this deposit, Mike? That is equity, because that is the majority shareholder of the C Corporation, right? The retirement plan is investing in X amount of shares that equal 500, in this example, X amount of shares, let's say for like 95% of the company, or, it could be 97, it could be 100, that's not encouraged. Like, usually the IRS and the DOL would like to, see an individual have some minority stake in the business, but the majority of the business is owned by the retirement plan. So that 95, so let's say that 95% of the stock is getting purchased for $500,000, right? If we take a handy dandy calculator, then that means that 500,000 divided by 0.95, that means that the total value of 100% of the stock is 526,315.79, right? 526,315.79. And so of that amount, 500,000 represents 95%. And so what that $500,000 deposit is that's the retirement plan investing in the stock. So that $500,000 deposit is going to get allocated to the equity section of the books of the company, and that's going to be the retirement plan's shareholder equity account. So that's not a loan, right? That's not a loan. That's not an individual's equity. The individual indirectly owns the stock because the stock is an investment inside the individual's retirement plan, but the retirement plan is the direct shareholder. So people tune in, click the subscribe button. There's going to be a lot of content that we're going to be dropping over the next several weeks, months, years about ROBS. ROBS is a real in-depth topic. Jeet, do you have anything to add about ROBS, or I know that you've been getting exposed to it, or should we just have everyone stay tuned for future episodes?
No, I think we're good. You provide a good, basic details about that. And yes, eventually when we plan to do this more, so people, can get to know about, ROBS. So yeah, I think you covered it well.
Awesome. Well, yeah, that's what I wanted to talk about on this very brief, high-level episode of ROBS, is just to introduce it. What does the freaking acronym mean in the first place? Why does it have to be a C Corp? And for anyone out there, if you if Swartz and Reeder Advisors is not your CPA firm, number one, what's wrong with you, right? Number two, just kidding. Number two, your accountant, there's a good chance that your accountant's never seen this before. There are others that are aware of this, but just know that whether, you, business owner, and or your accountant know what that is, what that deposit, that big deposit coming in from the retirement plan, that is equity, that is the retirement plan purchasing the shares from the C Corp. And so that goes to the equity section of the financial statements. And that's what that is. It's not a loan. It's not revenue. That is the retirement plan investing in shares of the C Corp that it owns the majority of. So that is, we're just scratching the surface, people, of ROBS. So stay tuned, get ready for lots of content coming to you from Swartz and Reeder Advisors YouTube channel. Myself, Michael Reeder, managing shareholder of Swartz and Reeder Advisors, a CPA firm with a niche in the franchise industry and the business resale world. Thank you so much. Have a great day. Jeet, thank you so much for being here.
Yep. Thanks, Mike.